Yeah, this is Kenya. My name is Claire Dawai. I'm the CEO of the Chamber, the Sub-Saharan Chamber of Trade. We work with 36 countries in the region. We are an apex body to Chamber of Commerce organizations. So what we do, we help them do what they ought to do best, and that is trade facilitation. So today, I'm here with an amazing panel, tasked with the mandate to talk about the opportunity that is Kenya and why you should invest in Kenya. I'll probably ask my panelists to introduce themselves. So we'll start with Sarah.
Is this on? Yep. Hi, so my name's Sarah Burns. I'm not up there. I'm actually replacing Helena, who unfortunately couldn't be here. But Helena and I have done quite a few projects together, some of them in Kenya. So as I said, my name is Sarah. I am the founder of NIA Impact Investing. And I focus on working with small businesses, helping them become investment ready, and then connecting them to international investors. And so we have done a couple projects across Kenya, working with both tech companies as well as I call real economy businesses, helping them find the appropriate capital.
Thank you, Sarah. Yes, please.
Good morning, everybody. Chris Lowe. I'm the Regional Director at I&M Group. I&M Group is a banking, insurance, corporate advisory, and real estate business headquartered in Nairobi, where we're the number 6 bank on multiple dimensions. We also have operations in Tanzania, Uganda, Rwanda, and a joint venture with Seal Group in Mauritius. I have accountability for the businesses outside Kenya, but also all the group functions other than tech and ops sitting in Kenya. Thank you.
Thank you, Chris.
Good morning, everyone. My name is Sheila Charisima. I'm a partner at NIST Capital. We are a boutique corporate finance and transaction advisory firm advising businesses all across East Africa, helping them to raise capital. And currently, in partnership with Patisa, we're looking to raise a special opportunities credit fund to serve one of the underserved spaces within the credit markets in East Africa. Thank you.
Thanks, Sheila.
Hi, good morning, everyone. My name is Suleiman Kigundu. I'm the Chief Investment Officer at Equator Capital Partners. We are an impact investor focused on particularly financial inclusion, so we invest in financial services businesses across Africa and Asia. So that's microfinance, small business banks, and we have investments across a number of countries, including one that we're just about to conclude in one of the tier 3 banks in Kenya. Thank you.
Thank you, Suleiman.
Good morning, everyone. My name is Joseph Ngangera. I am a partner at Kaplan & Stratton, which is a corporate commercial law firm in Nairobi, Kenya. I basically help investors invest in companies and exit into companies while mitigating their risks. So very happy to be here and share my insights.
Thanks, Joseph. As you can see, oh, yes. This must be Frank. Karibu, Frank. Paul. Yeah, Paul. Please introduce yourself.
Good morning. My name is Paul Kamau. I'm a director of a company called Finaltas. We are an investment and transaction advisor firm in Kenya, offering a range of services from capital raising, deal structuring, investment readiness, and we work across the region. So not only Kenya, but mostly the Eastern and Central Africa region, especially the English-speaking side. Thanks a lot for being here and looking to interact more with you.
Thank you, Paul. As you can see with me, I have great minds, and we hope with a few minutes that we have been given, we'll be able to pull it off and showcase Kenya as it ought to be. Now, without going into much, we cannot talk about the opportunities that Kenya has without talking about the plans that Kenya has. So the plans that Kenya has are all encompassed in the Kenya Vision 2030. This is a long-term development blueprint that all our presidents have kept on using, and every succeeding president strives to use to see the country grow. Now, what is the aim of the Kenya Vision 2030? So for us, it's to create a globally competitive, prosperous country with high quality of life, and to transform Kenya into an industrializing middle-income country while providing high quality of life. Now, the pillars of Vision 2030 are three. We have the social, political, and the economic. When we talk about the social, we're talking about the cohesiveness and the equitable social development. When you talk about political, in the minds of our presidents is the need to be issue-based, people-centered, result-oriented, and accountable, and have an accountable democratic system. So when we talk about economic and we're talking about Kenya Vision 2030, it's a very ambitious plan. We're talking about Kenya growing in leaps and bounds, 10% growth every year till the year 2030. Now, the economy, of course, when you're talking about economic growth in Kenya, what are we thinking about? We're talking about agriculture, we're talking about financial services, infrastructure, land reforms, manufacturing, tourism, and trade. So that's economy. But we cannot talk about economy without talking about infrastructure, because that is what the last government that we had an emphasis on. So we've seen many roads being built. And one of the projects that I must talk about is the LAPSSET project. What is the LAPSSET project? I'm talking about the Lamu Port, the Southern Sudan, and the Ethiopian Transport Corridor. So what is this? When we're talking about LAPSSET, we're talking about building a 32-berth port in Lamu, one of its kind. This is a deep sea port. We're talking about developing highways. So we're talking about the Lamu Isiolo, Isiolo Juba, Isiolo Addis Ababa. We're talking about Nairobi Garseni. We're talking about the LAPSSET project. We're also talking about pipelines, developing two kinds of pipelines, the crude oil pipeline and the product pipeline. Crude oil pipeline from Isiolo from Lamu Isiolo, from Lamu to Isiolo, then to Isiolo to Juba. The product pipeline, again, Lamu Isiolo, then Isiolo to Addis Ababa. We are also talking about an integrated railway system. The standard gauge railway system, moving from Lamu to Isiolo, Isiolo to Juba, Isiolo to Addis Ababa, and Nairobi to Isiolo. We're talking about developing 3 international airports in Lamu, Isiolo, and in Turkana. We're talking about developing resort cities in Lamu, Isiolo, and Turkana. We're talking about merchant oil refinery in Lamu. We're talking about the High Grand Falls multipurpose dam and the fiber optic cables and communication systems. We have not even touched a fraction of this. So this has been our vision that the stakeholders came up with in the year 2007, and we have not even begun working on it. So that is Kenya, and that's the opportunity that we have. So I will start with Sheila. Sheila, to you now. What opportunities do you think there are in Kenya? And how do you think an investor can approach that?
Thank you. I think from your overview, that you've focused quite a bit on sort of what is needed from a public infrastructure perspective. And I think that's separate in the sense that obviously the government of Kenya has been raising these bonds and going to international markets to finance, or hopefully finance some of these projects. So I think that's within the public infrastructure or public spheres, what you've highlighted potentially looks at what the government is seeing as strategic areas from a national level. From where I see it in the private sector and what we're seeing in the private sector, we're sector agnostic. So obviously some of the areas you touch on Big Four, particularly around manufacturing and promotion of sort of products made in Kenya and exporting from Kenya to the rest of the region. Obviously, the region is quite a bit of a big market. We do see opportunities around agro-processing. We see opportunities in logistics. We see a little bit in healthcare, and quite a bit in real estate. So in reality, of course, most of the East African markets, there tends to be a bias towards hard assets and particularly real estate. So in my line of business, I've seen quite a bit of that. But specifically, I think where also the gaps tend to lie. So you find that on the early stage, if you think about the financing curve, earlier on you always have, at the early stage of a company, you have quite a bit of VC financing. In the growth stage, everybody's rushing towards growth, right? That's where there's sort of the crowding of private equity. And then when a company gets to maturity or runs into some challenges, there's not much of financing alternatives for them. So where we tend to see the gap comes in sort of that plateau, where a company could either continue to grow or could head towards distress if they're stressed. So where we are trying to channel financing is in this sector, where it's sort of a special opportunity because the VCs are not looking at it, the private equity is not looking at it, the DFIs are not looking at it, the banks are not looking at it, and yet it's a huge market because every company at some point will go through that in its trajectory. So in terms of private credit solutions, I think people are thinking differently on what financing solutions are best for the African continent. You know, I think when there's always been a push around private equity, but the performance of private equity has begged the question as to whether we should be thinking differently about how to finance opportunities within the African continent. And I think there's a big gap around private debt, and particularly for businesses undergoing stress or at maturity that have two ways to go: either find the right financing solution and continue to grow, or end up in distress because there is no appropriate financing for them.
Okay.
So if I...
Yeah. Thank you,
Yeah.
Sheila. Thank you, Hilda. Sarah, they say that Kenya is the largest economy in Eastern Central Africa, contributing over 50% of the region's GDP. What do you think has attributed to that, and how can we scale it up as Kenya?
Yeah, that's a great question. So I'm coming from a background working with small businesses, and I really do think that formalizing those small businesses and making sure they have access, exactly as you were saying, Sheila, to appropriate funding is really, really important. So obviously within these small businesses, we're seeing a lot of agriculture, a lot of agro-processing. We are seeing, this big tech boom across Kenya as well. And as Sheila was saying, that VC funding is coming in. There can always be more, but it is coming in. But I think where that gap still lies is more in the real economy. So like in manufacturing and in these kind of smaller businesses. And in terms of impact and growth, we know that 70% of jobs are coming from these types of businesses. So I think one of the things that we really need to focus on is how can we make sure we're getting appropriate capital and support to these types of businesses. And I'm sure across this conference we'll talk about this a lot. And unfortunately, Yvonne is not here from Untapped, but I do think we need to look at different structures of this type of capital. As Sheila was saying, in private debt, UNCAP, which is a business doing revenue-based financing for small businesses in Kenya and the region is really kind of changing how we look at it, as well as Untapped, which is doing asset-based financing. And so I think, as I said, that contribution and further growth is really going to come from working with these small businesses and making sure they have access to what they need.
Yeah, thank you. Now, Paul, Kenya has a large market access. I would say this is because the country has moved and signed lots of bilateral treaties, and is also a participant to some regional treaties. An example is the AGOA. We have the African Growth and Opportunities Act. We have the African Continental Free Trade Agreement. We also have the African, Caribbean, and Pacific European Union Economic Partnership Agreement. which gives duty-free access to the European Union, among others. Now, my question to you is this. As much as we have done all these things as a country, let's just go to the basics, like the East African community. Do you think that Kenya is operating seamlessly in the East African community to be able also to do so in the African Continental Free Trade area and also participate in some of the agreements that it has executed with other countries?
Thanks a lot for the question. One of the things that you'll note, especially in regional trade, is that in as much as there are legislative instruments, in as much as there are such kind of documents that have been signed, there always exist some non-tariff barriers. You'll always find that each economy tries to adopt some kind of protectionist in the sense that they would like to put their industry first. However, in as much as it has been noted, Kenya being one of the large economies in the region, it's always some competitive advantages that we'll always get. So, back to your questions, are there opportunities? Is it a restrictive barrier? Absolutely not, because at the end of the day, like in the last 2 days, there was some export that was done under African or trade access from Kenya, where some tea were exported out, some batteries were exported out. And what I foresee is a situation of where anything that has been blocking the free flow of trade, all the governments are very progressive. You'll find that Kenyan government is very progressive, Ugandan government is very progressive, and there is a common purpose to ensure that the economy, the market flows seamlessly. Like common now, the passport is common. All the countries are moving towards having one passport. Also, you'll find that there are some countries that you can fly to, especially from Kenya, using your ID, you no longer need passport. So yes, there are those baby steps toward that. And what I can for sure tell is that the integration is on its way forward and not its way backward. The large market access, the language is common, you no struggle about it. You'll find like in Kenya, most of the regional head offices for covering the region, they are based in Nairobi. So the future can only be bright.
I will still insist on that question, and over to you, Joseph. I have not seen the East African community work as well as it ought to. You can read something and then practically implement something. I'll give you an instance where Kenya stopped importing maize from Tanzania. The president had to come to Kenya to resolve that matter. Yet the East African community, as they are and what they agreed on paper is that trade should be free and fair and everybody should be able to trade as they need to. So one president will wake up one morning and feel offended and decide to do whatever they need to do. So what do you think about that, and what should we do as a way forward to remedy all that?
Yeah, so I fully agree with you, and that is a true state of affairs in the East African community. At the end of the day, the countries are still neighbors, and neighbors do have squabbles. You could have a neighbor saying that their piece of land is to the right of the side of the fence or etc. Or don't plant a tree there. You have trees falling down on my piece of land. So there are neighbors. We are neighbors, and we do have squabbles as neighbors. However, I think for the most part, this African community has been working properly. It has been working seamlessly. We have a common trade tariff that we apply on all imported goods. For the most part, that has worked. However, as you do say, we are still competitors in the region. You would have, say, and I'll just take Kenya and Tanzania. Tanzania is a fairly big country as compared to Kenya, and There, obviously, Tanzania will wonder why should Kenya act as a big brother? Why is Kenya then taking the lead on some of these actions and not Tanzania? And then you then have the trade wars. As you rightly say, you have Kenya stopping the import of maize. You have Tanzania as well indicating that goods have not been manufactured in Kenya based on certificate of origin requirements, and therefore they charge a higher import duty. So these are neighborly squabbles, but I do think for the most part the EAC is working. What can be done to increase the integration? I think it is a process. It's not, regional integration does not happen overnight. EU is doing a fantastic job. We are aiming to get there. But I think the harmonization of our laws, particularly our finance laws, our tax laws, would be a good start to getting there. A common currency, we would love to have a common currency if that is actually possible. But I think it's baby steps. We are getting there, and I think that the outlook is positive, and we've done so well. I mean, we've done well so far.
Thanks, Joseph. Now, Mr. Suleiman, do you think Kenya has created an enabling economic policy framework, and how has it done that?
Well, thank you very much. And I guess in a nutshell, we'll say yes. Certainly when you listen to things about Vision 2030, Big Four Agenda, the LabSec, what have you, there's a lot of good initiatives that are sort of encouraging investment or encouraging sort of progress. I think, however, one has to step back and sort of move away from some of the buzzwords and what have you, and sort of drill down to say, well, is there a clear, concise, and coherent vision as to what all of these things fall into as a framework? And I think that's where you sometimes struggle with successive governments of, it's okay when you're changing emphasis, but it becomes a challenging when you're changing sort of what you actually want to do. Because ultimately, to be a positive investment destination, it's about the effective implementation structure and the team that you're using to implement that. So I would say that we're just in a country that's just gone through a transition of government. Now, the real question will be, how much of a pivot do you have with a new government coming in as to whether or not they're sort of maintaining sort of those key focal points, as we said, of infrastructure, whether they're looking at the industrialization. For any investor, you'll know that you need a healthy, educated, appropriately educated workforce. So, for instance, you've had a new education curriculum brought in. Now you're sort of talking about, well, what are we going to do with that? So I think all of that becomes important. I think the other thing to Joseph's issue, comment and other comments around here is using his analogy of real estate, is that sometimes I think countries get so bogged down in competition against their neighbors without realizing that the first thing is to make sure that your neighborhood is attractive. So you can't be the best house in the worst neighborhood. It's always better to be an adequate or mediocre house in a good neighborhood. So I think there needs to be clarity also around sort of the regional collaboration and partnership and enhancing how they're moving these different things with some alignment. And I think that's where the big challenge will be as we look at some of the regional conflicts that we're facing, regional tensions, whether you're talking about Ethiopia on the sort of cusp of the East African community, or even within the community itself. I think what investors are going to be looking for is how do our leadership engage with each other? As you say, there will always be squabbles, but are you looking at it with a clear thing of saying, yes, you have your vision, but you also want to make sure that you're all adequately aligned? We've seen general alignment, but you can also see with some of the gaps in some of these infrastructure initiatives, such as like your SGR, your standard gauge rail, where it makes sense if you work in partnership to get it to extend across the different borders. What has hindered it is that one person starts, they think about it in terms of their own context, and then it gets bogged down because you suddenly haven't closed the leg. I think to the extent that we're working with these underlying broad-based initiatives on a regional and collaborative basis, I think the future is bright for Kenya. Thank you.
Thank you, Suleiman. Now, Chris, do you think that Kenya has an established private sector? And if so, why would you say
In a nutshell, to follow Sule, yes, it does. It does have a very established private sector, and I think to take it back to the question, why invest in Kenya? If you're looking at East Africa, while the community is a very important part of that and actually should form the basis of your investment in the region, Kenya has got a far bigger established manufacturing base. It's actually been the lead on innovation. It's now clearly one of the fintech hubs across the continent. Other members have talked about the talent that's available in that market, and indeed the significant investments that have been made to date. That would not be the case in all those markets, but they're all at different stages. I think staying with Kenya, also what you've seen in the recent elections is a significant signal that democracy is working. And that, to me, as an outsider, albeit living in Kenya, is a very important landmark for Kenya from an investor perspective. Overlay that with other enabling legislation. So there's a very robust independent central bank. A number of tech companies are slightly running into trouble, if I can put it like that, because they thought there weren't going to be regulations around payments and lending, etc. All of those, to me, in the medium to longer term, are absolutely essential for countries to put in place. Kenya was the first to move on climate change. Rwanda's now done it. Uganda's now done it. Mauritius is doing it. So it tends to take the leading stance, and that's why there is, to my mind, a vibrant private sector. And even if the government doesn't get it right, it's a big enough private sector to, so to speak, go it alone. And it can do that by virtue of the fact that it is servicing the region. It's not one of the landlocked countries. It's got ports, and the infrastructure side is moving in the right direction. If you've not been to Nairobi in the last 6 months, you won't have experienced the new expressway. Okay, it's only a small part of the puzzle, but it does transform doing business there because you can get in and out to the airport much quicker. I could go on, but
well
yes.
articulated, Chris. Thank you. So, Sarah, our former president, Uhuru Kenyatta, ran with a Big Four agenda. Hence, you know, when you run with an agenda, every investor would look at it as an investment opportunity. So we're talking about investing in affordable agriculture, affordable housing, food security, infrastructure, manufacturing, affordable healthcare. Did this have an impact, by him running with the Big Four agenda, did it have an impact on the economy? Did we find investors coming in and flowing with the Big Four agenda? And where has that brought us to now as a country?
Okay. Yeah, so I think it's definitely, you know, we've seen a lot more investment coming into these four areas. I mean, for me, I've particularly seen manufacturing and food security. Those are kind of the two areas that I've worked in the most. I think one of the things that as we move forward, what we need to look at is also the exit strategies for this. So I think the previous government focused a lot on bringing that capital in, which I think is really, really important. But I think that the next step would be, you know, how can we very successfully get this capital out? I mean, I work with a lot of international investors, and that's one of the biggest concerns they have. So just as an example, I worked with a food tech company, and something as simple as they decided to set up a holding company that was in Delaware, which is, I mean, a very common thing that we see, but that my investor had invested in the company in Kenya, and that looked like an exit to the Kenyan government, which meant we ended up paying a lot of taxes. So I think in terms of the Big Four, there's definitely a lot of capital coming in, and hopefully there'll be more capital coming in to promote that growth. But I think the next step is to look at, you know, how do we actually allow investors to exit, because that will be, you know, what we want to see, and the next step for Kenya to really be that absolute leader, which I think they are on the continent.
Thank you, thank you. Now, Sheila, what are your thoughts on the bottom-up economy as far as investments are concerned?
I don't know if I'm the best placed person to comment on that, but I do think Obviously, in some of this, it was a campaign. There are things that work for a campaign, and there are things that work in practice, I think, as what she's talking about. So in terms of what the current, well, I guess it's relatively a free place to talk about, but in terms of what the current government run on with the bottom-up economics, I think now that the campaign is over, the practicality of what that actually means, because on day one, right, they run on reducing the price of flour, reducing the price of oil. The basic food basket for an average Kenyan is actually more expensive now. And of course, the problem is that you can't shortcut fundamental economic gaps or gaps in the economy. So subsidies were obviously, they lifted the subsidy on fuel, and that had a huge impact, but it was also unsustainable from a funding perspective, right? So when you're running on a campaign that says bottom-up economics, what does that mean? Because for the average person, that meant that their cost of living should improve, and that the focus will be on improving their livelihoods, which you could tie to the previous government's Big Four agenda. I think oftentimes, of course, governments will run, from a policy perspective, it's very different from what you run on for a campaign and what is going to sell. So now the government is being put to task in terms of actual implementation of that. And I think the Kenyan electorate is more sophisticated, and they will hold the government accountable. And I think it will be interesting to see how that plays out. But on day one, most people are saying, well, this bottom up is not working for us.
Thanks, Sheila. Thank you. Now, Joseph, let me wrap it up. Joseph, this is an important question. The reason why America is not trading as much as it should with Kenya is because when we look at AGOA, we're looking at the African Growth Opportunities Act. The reason why it's not trading as much is because they say there is this non-tariff barrier where they say the legal framework is not conducive. When I'm talking about legal framework, I'm also talking about intellectual property rights, where they're saying I come in with my music, I come in with my whatever I can, but still I cannot protect my property, my intellectual property. What are your thoughts on that, and what can we do as a country moving forward?
Yeah, so the legal framework as a non-tariff barrier, I think, is it's a real issue. Although on IP, I would say Kenya's IP protection framework or legal framework is one of the best, I think, in the region or in Africa. There are clear laws on copyright protection, on trademark protection, on patent protection. We do have a Kenya Industrial Property Institute that is extremely vibrant. We have our courts that do protect intellectual property. So I think on the intellectual property front, I would not agree with anyone who says that our intellectual property needs a little bit of help. I think we are one of the leaders in the region. When it comes to the legal framework, however, other non-tariff barriers, ease of getting licenses, ease of setting up, certainty of taxes. I think there we could do with a little bit of help, or we could do that could do with a little bit of work. Licenses in Kenya, regulators are, I would say that they're at a growth stage. Initially, if I could use a U type of curve, initially regulation was pretty easy, pretty straightforward, because you had a checklist of items, you knew what you needed to get, and then you'd easily get the license. But over time, as structures become more complex, our regulators are now starting to ask themselves, why does this checklist exist the way it is? Or your particular structure doesn't fit into my checklist, so how am I supposed to regulate you? And then what happens is that you have a dip in the regulation where regulators are asking why, and that takes really long. So if you're trying to get a particular license in a particular sector, say telecommunications, it will take you quite some time just to get that license. But I think it's a phase. I think we're just at the dip, at the U, where the regulator is asking themselves why. With time, the regulator will understand the reason for their mandate a little bit better, will understand structures a little bit better, and then we'll see that climb up again, where there'll be more certainty as to what is required in terms of regulation in Kenya.
Thank you,
But we are there to help. Feel free to contact us.
Thank you. I'm also under pressure here. So yes, I agree with you. You know, we in terms of doing business, we were ranked 90 out of 190 countries. Now we're at 56. I think Kenya is doing better. And of course, now with unwrapping, now we have special economic zones in Kenya, and most of those tariff and non-tariff barriers we have done away with. So we all welcome all of you to do business with Kenya, and I thank you. Please, a round of applause for my panelists. They did a great job.